Welcome back to XRP Insider, everyone. Today we have a massive update shaking both the crypto market and the political world at the same time, because Bitcoin, XRP, Ethereum, and Solana are suddenly bouncing back after days of painful selling pressure, and investors are now asking one huge question. Is this finally the moment the market turns around? Over the last several days, fear completely dominated sentiment, as global uncertainty exploded following rising tensions tied to President Donald Trump's Iran conflict strategy. Traders were panicking, institutions were pulling money out of spot Bitcoin ETFs, and many investors believed the crypto market was about to enter another brutal correction phase. But suddenly, everything changed after the Senate voted to curb President Trump's Iran war powers, sending a signal that political risks may finally be cooling down. And the crypto market reacted immediately. Bitcoin pushed back above $77,000. XRP started regaining momentum, Ethereum stabilized, and Solana also joined the recovery rally. Right now, traders around the world are closely watching whether this move is the beginning of a larger breakout or simply a temporary relief bounce before another wave of volatility hits the market. The most important thing investors need to understand is that crypto markets were not falling because of weak blockchain technology or lack of adoption. The sell-off was mainly fueled by macroeconomic fear, rising Treasury yields, and geopolitical tensions that made traders nervous about risky assets. Whenever global uncertainty increases, investors usually move away from speculative investments and rush towards safer positions. That's exactly what happened over the past week, as Bitcoin dropped from nearly $82,000 down towards $76,000. XRP and Ethereum also suffered as liquidity slowed and risk appetite disappeared across financial markets. But now, after the Senate's 50-47 vote to limit the expansion of military conflict powers, markets are beginning to breathe again. Investors are viewing the decision as a signal that Washington may be trying to reduce uncertainty rather than escalate tensions further. That single development immediately changed market psychology during Asian trading hours, and crypto traders responded very quickly by buying the dip after 5 consecutive losing sessions. Bitcoin's recovery above $77,000 is becoming extremely important from a technical and psychological perspective. Many analysts feared that if Bitcoin broke below $76,000, the market could rapidly fall into deeper panic selling. But instead, buyers stepped in aggressively, showing that institutional demand may still be strong despite recent ETF outflows. According to market data, Bitcoin gained roughly 0.5% during early trading hours, while XRP, Ethereum, and Solana all climbed between 0.4 and 0.8%. Now, some people may look at those numbers and think the move is small, but after 5 straight days of losses, this kind of coordinated rebound across major cryptocurrencies matters a lot. It tells traders that confidence may slowly be returning to the market. And once confidence begins rebuilding, momentum can accelerate very quickly in crypto. Especially for XRP holders, this rebound is creating fresh optimism because XRP has been fighting hard to regain bullish momentum after struggling against broader market weakness over recent weeks. What's even more interesting is that traditional financial markets also started flashing strong risk-on signals at the exact same time crypto rebounded. Oil prices dropped, Treasury yields softened, and Nasdaq futures climbed higher. These moves matter because crypto markets are now deeply connected to macroeconomic conditions. When Treasury yields rise sharply, risky assets like Bitcoin and XRP often face pressure because investors can suddenly earn better returns from safer government debt. But during Wednesday's session, both the 2-year and 10-year Treasury yields fell by more than 2 basis points, helping ease pressure across speculative markets. At the same time, WTI crude oil futures dropped about 0.75%, reducing fears of escalating inflation tied to geopolitical conflict. Lower oil prices can sometimes calm markets because investors begin expecting less economic disruption ahead. When you combine falling yields, lower oil prices, and improving political stability signals, it creates the perfect environment for crypto assets to stage a rebound. That's exactly what appears to be happening right now. Now let's talk about the development that may actually be even bigger for the long-term future of crypto than the Senate vote itself. President Donald Trump reportedly directed the Federal Reserve to review how depository institutions may gain access to payment services. This is huge for the crypto industry because one of the biggest problems crypto companies have faced for years is banking access. Many blockchain businesses struggle to maintain stable relationships with traditional financial institutions, making it harder for them to process payments, manage liquidity, and scale operations effectively. If wider access to payment rails becomes available, it could completely transform institutional participation in crypto markets. Experts are already saying this could increase settlement efficiency, improve liquidity, and accelerate long-term adoption across the industry. For XRP specifically, this matters tremendously because XRP's entire ecosystem is heavily connected to cross-border payments and financial infrastructure solutions. Any move that improves banking integration could indirectly strengthen XRP's long-term utility narrative. Naeem Aslam, the CIO at Zay Capital Markets, explained that broader access to payment systems could improve institutional confidence significantly. And confidence is everything in crypto markets. Institutions do not want uncertainty. They want stable infrastructure, regulatory clarity, reliable banking relationships, and efficient settlement systems. The moment those barriers begin disappearing, massive capital flows can enter the market very quickly. This is why some investors believe the current rebound may actually represent something much larger than just a short-term recovery from geopolitical fears. Instead, it could mark the beginning of renewed institutional optimism heading into the second half of the year. XRP investors in particular are paying close attention because XRP has long positioned itself as one of the leading blockchain assets designed for institutional finance and payment solutions. If banks and depository institutions receive better access to payment rails, XRP supporters believe the token could benefit massively as real-world financial adoption expands. Another major catalyst traders are watching now is the release of the Federal Reserve meeting minutes from April's FOMC session. Markets are expecting these minutes to reveal how aggressively the Fed is balancing inflation concerns against slowing economic growth risks. This matters because crypto markets have become extremely sensitive to interest rate expectations. If the Fed appears too hawkish, meaning they prioritize fighting inflation with higher rates for longer, risk assets like Bitcoin and XRP may face renewed selling pressure. But if the Fed sounds more concerned about economic weakness, traders may begin pricing in potential rate cuts or softer monetary policy later this year. That would likely benefit crypto significantly. Analysts from Nexo have already stated that investors will carefully analyze every word from the meeting minutes to understand how policymakers currently view inflation risks versus growth concerns. In other words, this rebound could either gain strength or lose momentum, depending on what the Federal Reserve signals next. At the same time, many traders are noticing that Bitcoin's recovery is happening despite continued uncertainty surrounding ETF flows. Over the past week, spot Bitcoin ETFs experienced heavy outflows, which worried investors because ETFs have become one of the strongest institutional demand drivers in the crypto market. When ETFs lose money rapidly, it often signals weakening investor confidence. But now the market is showing resilience, even with those outflows still fresh in traders' minds. That's important because it suggests organic market demand may still exist beneath the surface. Some analysts believe long-term holders are quietly accumulating during periods of fear, while short-term traders panic sell. Historically, crypto markets tend to reward patient investors who buy during uncertainty rather than chase hype during euphoric rallies. This is why many experienced traders are closely watching current price levels to determine whether smart money is positioning itself before another major upward move begins. For XRP holders specifically, this recovery is bringing renewed energy back into the community after weeks of frustration. XRP has remained one of the most discussed cryptocurrencies in the world because of its unique role in global payments and its long-running regulatory battles. Even though XRP has faced major challenges over the years, its community remains incredibly loyal and optimistic about future adoption. Whenever the broader crypto market rebounds, XRP often becomes one of the fastest-moving assets because traders see it as undervalued compared to other major cryptocurrencies. Right now, many XRP supporters are pointing toward improving macro conditions, possible institutional adoption growth, and stronger regulatory clarity as reasons why XRP could eventually outperform during the next major bull cycle. Whether that happens or not remains uncertain, but one thing is absolutely clear. XRP continues attracting massive attention whenever market sentiment begins shifting from fear back toward optimism. Ethereum is also participating in this rebound, And that matters because Ethereum remains the backbone of decentralized finance, NFTs, and countless blockchain applications. When Ethereum stabilizes, it often strengthens confidence across the entire crypto ecosystem. Solana's gains are also important because Solana has become one of the most actively traded altcoins during recent market cycles, due to its speed and growing developer activity. Together, Bitcoin, Ethereum, XRP, and Solana recovering at the same time sends a strong message that the market may not be as weak as many feared just days ago. Traders are now wondering whether this synchronized move could trigger a broader altcoin rally if macro conditions continue improving over the next several weeks. Historically, when Bitcoin stabilizes after periods of heavy selling, investors often rotate capital into altcoins, searching for higher returns. That's why XRP traders are especially excited right now. They know that if Bitcoin holds its recovery, XRP could potentially see even stronger percentage moves later. Meanwhile, another fascinating development is happening within the stablecoin sector. Reports show that non-dollar stablecoins are still struggling to gain meaningful market share, despite growing interest globally. Since 2021, non-dollar stablecoins have reportedly grown to around $771 million in supply, but their overall market share remains tiny compared to dollar-pegged stablecoins. Right now, USD-backed stablecoins dominate the market because they benefit from deep liquidity and access to massive U.S. Treasury markets. This dominance reinforces the enormous influence the U.S. financial system still holds over global crypto markets. Some analysts believe this is another reason XRP's long-term payment infrastructure ambitions remain important, because the future of digital finance will likely involve seamless interactions between traditional fiat systems and blockchain networks. As governments and institutions continue exploring digital asset infrastructure, projects capable of connecting both worlds may hold significant advantages moving forward. The political side of this story is also incredibly important because it shows how deeply interconnected crypto has become with global geopolitics. A few years ago, crypto markets were often viewed as isolated from traditional political events. But today, Senate votes, Treasury yields, Federal Reserve policy, and international conflicts can all influence digital asset prices almost instantly. This evolution proves that crypto is no longer operating on the sidelines of the financial system. Instead, it is becoming increasingly integrated into mainstream global finance. That integration brings both opportunities and risks. On one hand, institutional adoption can push prices much higher over time. On the other hand, crypto markets are now more exposed to macroeconomic volatility than ever before. Investors must understand both sides if they want to navigate this market successfully. Many analysts are now debating whether Bitcoin's rebound above $77,000 represents a genuine reversal or simply a temporary relief rally before another downturn. Some traders remain cautious because inflation concerns have not disappeared completely, and geopolitical risks could still return unexpectedly. Others believe the worst of the recent panic may already be over, especially if Treasury yields continue falling and the Fed eventually signals a softer policy stance. This disagreement is normal in crypto markets because volatility creates uncertainty, and uncertainty creates divided opinions. But one thing everyone seems to agree on is that the next few days could be extremely important for determining short-term market direction. Investors will likely watch the Federal Reserve minutes very closely, while also monitoring political developments and institutional activity. The emotional side of the market cannot be ignored either. Crypto trading is driven heavily by psychology, and fear can spread faster than fundamentals during volatile periods. Over the last week, many retail investors became discouraged watching prices fall day after day. Social media sentiment turned negative, bearish predictions exploded everywhere, and some traders started preparing for a deeper crash. But crypto markets are famous for reversing suddenly when fear becomes too extreme. That's why experienced investors often say the best opportunities appear when sentiment looks darkest. Right now, the market seems to be shifting from fear toward cautious optimism, and that shift alone can sometimes create powerful momentum. Whether this recovery continues or fades away will depend on upcoming catalysts, but the mood has definitely changed compared to just a few days ago. For long-term XRP believers, the bigger picture remains focused on adoption, banking integration, payment infrastructure, and institutional partnerships. Short-term price volatility may dominate headlines, But many XRP supporters believe the real story is still unfolding behind the scenes. If crypto banking access improves, if payment systems become more blockchain-friendly, and if regulatory clarity continues strengthening globally, XRP could potentially play a much larger role in international finance over the coming years. That vision is what keeps the XRP community so passionate, despite constant market volatility and endless criticism from skeptics. And now, with broader crypto markets showing signs of renewed life, that optimism is starting to return once again. At the end of the day, today's rebound reminds everyone how quickly sentiment can change in the crypto world. Just yesterday, fear dominated the conversation as traders worried about war tensions, rising yields, and heavy ETF outflows. But now, after a major Senate vote, falling Treasury yields, lower oil prices, and renewed optimism around banking access, the market suddenly feels very different. Bitcoin is climbing, XRP is recovering, Ethereum is stabilizing, and traders are once again watching for potential upside momentum. The next phase of this story will likely depend on what the Federal Reserve signals and whether institutional confidence continues improving. But for now, crypto investors finally have something they haven't had much of over the last several days, and that is hope. So, keep your eyes on Bitcoin, XRP, Ethereum, Solana, the Federal Reserve meeting minutes, and every major political development happening right now, because this market is moving incredibly fast, and the next big breakout or breakdown could happen at any moment. The crypto world never sleeps, and neither does the volatility that comes with it. Stay informed, stay careful, and stay ready, because the next chapter in this market could be closer than anyone expects.